Welcome to this explainer. Today, we're unpacking a blueprint that could literally rewrite the global banking playbook. We are diving into the NVC Fund Bank's 2026 capability statement. This is a master plan for a platform that merges traditional finance, constitutional trust law, and next-generation digital assets. We're talking about an architectural document that outlines an ambition so massive, it actually challenges our foundational understanding of how institutional capital might move in the very near future. Let's get into it.
We have to start with a number that is just staggering. $48 trillion. Yeah, trillion with a T. According to their institutional disclosure, this is the verified asset portfolio backing the institution. To put that into perspective for a second, that is significantly larger than the entire gross domestic product of the United States. It is a mind-blowing figure. This claimed capital base is designed to position them as one of the largest privately held institutional trusts in the world, theoretically providing the unshakable reserves for all of their global banking and digital asset operations. If true, a scale like this isn't just large, it's completely market-making. To wrap our heads around how this massive framework operates, we'll quickly run through their identity and scale, the NVCT stablecoin ecosystem, their global settlement infrastructure, their correspondent banking reach, and finally, the compliance and leadership team. Starting off with Section 1, Identity and Scale, the Institutional Foundation. According to the framework, the ultimate parent entity here is the NVC Fund Holding Trust. But wait, this is definitely not your standard corporate bank down the street. It was established back in October 2000 and chartered in Wyoming, operating as a sovereign-grade common law pure trust under the U.S. Constitution. The big takeaway here is that because of this deeply historical legal doctrine, the framework states they operate entirely outside standard SEC statutory reach. They are basically leaning on foundational constitutional protections to build a fortress around this capital, putting them in a highly unique regulatory category compared to modern corporations. And the scope of these claims gets even bolder when we look at the metrics. Alongside that Wyoming domicile, they're claiming an AAA credit rating equivalent. That's essentially sovereign status based on S&P metrics. Furthermore, they state their capital base heavily exceeds stringent Basel III Tier 1 and Tier 2 requirements. As you know, Basel III is the absolute gold standard for global banking safety, designed to stop those cascading collapses we saw back in 2008. Crucially, they emphasize this is achieved through a non-dilutive reserve structure, so their underlying asset base is maintained without issuing equity dilution instruments, keeping that core value fundamentally intact. Moving right along to Section 2, the NVCT stablecoin ecosystem, looking at their digital asset capabilities. Okay, the sheer scale of the tokenomics here is genuinely hard to wrap your head around. NVC claims their 30 trillion pre-minted NVCT tokens maintain a strict 1-to-1 US dollar parity. 30 trillion? To give you a sense of scale, Tether, the largest stablecoin in the crypto market right now, sits at roughly around 100 billion. This parity is stated to be fully collateralized and backed by that $48 trillion underlying asset reserve held by the trust. That means every single token they plan to circulate is, in theory, covered securely by their institutional portfolio. It's proposing digital liquidity on a scale previously thought impossible. So, how is this actually deployed under the hood? Well, the blueprint specifies that NVCT lives on the Base mainnet, which is Coinbase's highly efficient Ethereum Layer 2 solution. But what really stands out here is their forward-looking regulatory posture. They explicitly state the token is structured to meet the upcoming U.S. Congressional Genius Act of 2025. By building for laws that are still on the horizon, they are actively positioning this asset to be the absolute go-to for sovereign capital deployment and massive cross-border settlement. They are anticipating the future of institutional crypto and building the runway for it today. Let's look at Section 3, Global Settlement Infrastructure, their multi-rail operations. The absolute key phrase here is their multi-rail platform. They aren't just relying on blockchain tech in a vacuum. They claim deep integration with traditional financial heavyweights to ensure the money actually moves across borders seamlessly. They list themselves as full SWIFT network participants utilizing the next-generation ISO 2002 messaging standard. On top of that, they integrate domestic systems like ACH, large-value Fedwire for same-day dollar settlements, and Europe's SEPA. It is an all-encompassing web designed to plug directly into the established global financial grid. And bridging the gap between that traditional finance world and Web3, they highlight 24/7 instant USD settlement through the real-time payments or RTP network. This works perfectly in tandem with their on-chain capabilities. By utilizing both USDC and their native NVCT rails on the Base mainnet, they're outlining an infrastructure capable of continuous global liquidity movement. They are effectively erasing the boundaries between legacy fiat clearinghouses and modern digital ledgers. They're creating a system that literally never sleeps.
Which brings us to Section 4, Correspondent Banking and Reach Global Operations. The capability statement details critical correspondent infrastructure, specifically Nostro and Vostro accounts. For anyone who needs a quick refresher, these are the specialized multi-currency accounts that banks hold for one another. They are the absolute foundational plumbing for settling international trade. By offering these account structures, NVC Fund Bank is essentially acting as a mega clearing and settlement agency for its correspondent partners all over the world.
But beyond just basic account management, they list a comprehensive suite of full-service offerings. We're talking institutional overnight liquidity provision, issuing standby letters of credit, and complex import/export and structured commodity financing. Essentially, the whole shebang for global trade. And they make sure to stress that all of this is governed by a strict FATF-aligned KYC and AML compliance framework. This matters because it's a massive signal to regulators that, despite utilizing blockchain and constitutional trust structures, they are implementing robust due diligence. When you look at their geographic strategy, the ambition is truly worldwide. While their primary operating jurisdiction is that U.S. constitutional trust base in Wyoming, their blueprint maps out intense global integration. This spans from banking integration within West Africa's ECOWAS member states to massive sovereign capital initiatives in East Africa, deep SEPA connections in Europe, sovereign wealth engagement across the Middle East, and vital SWIFT corridors right across the Asia-Pacific. They are picturing a footprint covering the most critical, emerging, and established markets on the planet.
Finally, Section 5, Compliance and Leadership Team, the architects behind all this.
So who actually runs a platform of this scale? Honestly, discovering the human element behind a $48 trillion machine is fascinating. The document outlines a highly structured executive tier. Leading the entity as chairman, general executor, and CEO is Rev. Frank Ohoja Ikajiha. Flanking him is a specialized C-suite. Cecil B. Lucy managing the immense complexities of finance and treasury, Dr. Linus S. Atuba leading operations, and Dr. Hashiru O.L. Ajadi Munaru serving as the global chief compliance officer, overseeing all that massive risk and regulatory alignment.
Supporting that executive core is an extensive legal and operations advisory board. What's unique here are the highly specialized roles. You have individuals like N. Jude Menez and Professor Emmanuel Ofemun handling complex global legal frameworks and arbitration. Mark Ritchie is designated as Attorney General of the Estate Trust, and Carlos A. Ryerson acts as Paymaster for Treasury Payment Operations. This is a team explicitly built around the precise intersection of constitutional trust law and international banking strategy. You just don't assemble a board like this unless you're navigating extremely unique regulatory waters.
As we wrap up this explainer, we are left to ponder a remarkable architectural vision. If a platform combining historical U.S. constitutional trust structures with massive multi-rail digital asset issuance is deployed precisely as stated in this blueprint, well, how will sovereign-grade entities like this reshape the landscape of institutional finance by 2026? Are we looking at the actual future of global settlement? It's a question that challenges our entire traditional understanding of banking. Thanks so much for joining me to unpack it all.